We detected an unusual trade worth $7.2 million in Xpeng stock, ticker symbol XPEV, on May 16th. And what's also very unusual is that Xpeng reports earnings in a few days on May 21st. So in this video, we will analyze this unusual option activity to find out how this wealthy investor is trading Xpeng for earnings. Is it bullish or bearish? And then show how we set up a trading strategy in the same direction as this $7.2 million trade, because as we all know, the rich have more access to information, including insider information, such as earnings reports, to make better financial decisions on Wall Street. No wonder the rich get richer. So without further ado, let's dive into the data. On May 16, when we detected these unusual options, you can see here, on May 16, the option chain for July 19 options, at the 10 strike calls, we detected at least 7,200 options being traded. You can see the total volume on May 16. And also that the 10 strike puts, there were also at least 7,200 being traded by one investor. And we can see that because the open interest is less than 7,200 for the puts and the calls, that these were opening trades. And what was this wealthy investor doing? Well, let's analyze their trade. The July 19th, you can see here, for the 10 strike calls with an open interest now of 11,000. And on the puts, 9,000 open interest now. So they opened those trades on May 16 to sell the 10 strike puts and to buy the 10 strike calls, both to open. And when we analyze this trade, you can see that this is a bullish long trade, because as the share price of Xpeng stock goes up here on the x-axis, these options gain in value. If it goes down, we can see it becomes a loss. So when we take a look at the Greeks, it's very clear here. The delta is a positive delta. So that is why we know also that this is a bullish long trade. Okay. And how much did they spend? Well, they sold the 10 strike puts. Essentially, what that means is they were willing to own 100 shares at the $10 strike price. So 100 shares at $10 a share requires a buying power of $1,000 per contract. And since we know that they did 7,200, we multiply that out and get a total trade cost of $7.2 million. Quite a substantial amount for earnings. But because this is an earnings trade, it is not a high chance of profit trade in comparison to the trades that we share on our website. If you are interested in those, make sure to go to our website. We will put a link up here where we share trades that are also into the millions, but they have a higher chance of profit because they are not for earnings. Okay, because earnings reduces the probabilities, because there are risk involved with earnings. And so if you want to have a higher chance of profit, then make sure to go to our website where we share those stocks and the option strategies that we set up, because we don't follow the unusual options unless they are very high risk and that they are not putting a lot of capital, because we want to save time to focus most of our energy on our trades on our website, where we set up option strategies just like this one here. For earnings, we prefer to set up our own option strategies because we can increase our chance of profit, even though it is not as high because it's earnings. You can still do it. For this trade, you can see that we have a positive Vega trade. We have a slight theta decay here, okay? And because this trade does require a lot of buying power per trade, that's another reason why we want to set up our own option strategy. And how we did that, we went to the May 24th options, and you can see our positions over here. 3 of these options for each of our trades. What we did over here at the 9.2 strike calls, we sold 2 for each trade. We bought the 8.5 strike call and the 10 strike call. And so when we analyze this trade, you can see this is our trade. It only cost $21 per trade, much less than the 1,000 that the unusual options require. So we can decide how much risk we want by position sizing, how many contracts we want to put into this trade. Over here, this is a butterfly strategy. And you can see that from the Greeks, the delta is a positive, since we are going bullish long, just like the same direction as the unusual options. But what's different is the Vega. This is very close to 0 here, 0.04, essentially 0 here. So we don't have the volatility risk from earnings, because it's very volatile during earnings, and especially after earnings when volatility goes down considerably. We don't want our trades to lose in value from the drop in volatility. And that's why we prefer not to have a positive Vega trade if it's possible. Sometimes it's not, but we do what we can to reduce our Vegas when we trade earnings. And that is why we prefer this trade over the unusual options that do have a positive Vega. Okay, so if you want to learn more about our strategies and the trades that we pick, then make sure to go to our website. You can see that this trade is still a bullish long trade. We can potentially make $78 per trade. Okay, and that's still quite a lot, because if you take 78 divide by the cost of 21, we have a risk to reward ratio of 1 to 3.7, meaning we could make 371% profit on this trade. Okay, if we end up around this price level. Even if we rally even more and go up higher, we could still make at least 100%. You can see $29 here. This is more than 21. So that's more than 100% here. Okay, so that is how we are trading Xpeng. And check out our website if you want to learn more on our strategies and gain access to the stocks that the wealthy investors are trading that have higher chance of profit than this trade here. Let us know in the comments below, what do you think will happen to Xpeng stock? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.